Welcome to Bears in Exile. Today is Friday, June 24th, and it is time for the market overview. Normally we do this later on in the weekend, but today is a special occasion, and we'll just be looking at the SPX and the Dow. And here we are with the SPX, which, is not what we usually do. But, this is the most important chart. And, over the last few days we have been expecting a bounce of some sort to occur. And yesterday we had the just gigantic hammer. And, today it just did not matter. We had a big, ugly red candle. And it's at this point where we may concede that the bounce is not going to happen. Down here we have the 200-day simple moving average, and the talking heads and all kinds of other people say that the 200-day moving average is the, when you get below it or you get above it, that is what defines a bull or a bear market. And you can see that we've bounced off of it twice. It's supposed to be massively heavy support, and we are, just a hair away from it now. So certainly it is possible, for it to go down, touch it, and then, this third time bounce off of it, and here we go for the rally. But at the same time, it would be doing everyone a disservice to say that that's going to happen, and certainly we are in a massive danger area. Yesterday it had everything going for it. Big, super hammer that we haven't seen one of that size in, months, if not years. And you had the MACD histogram ticking up. We had the MACD itself ticking up. Different things which certainly, if it was time for it to do it, that was really its moment. So now it is time to reevaluate and re-prepare for, whatever the market wants to do so that we can make money off of it. We should never, ever be tied into one methodology, bull or bear. And, if it wants to go down, that's fine. We can make money off of that. If it wants to go up, we can make money off of that. All that matters is that we make money. So it certainly looks like the odds of it going up now are severely diminished. The long-term moving averages are strengthening, separating. Short-term moving averages are, definitively pointing down once again. So the upward call certainly looks like it's not going to happen, and better to be defensive now and be careful now than wait and have some massively bad thing happen and get stuck holding the bag. So at this point I will be completely neutral, and I'm completely in cash, waiting for it to definitively decide that it wants to go through it, which is probably going to cause all kinds of panic and selling, and some indecision for a retest possibly, if that's what it wants to do. But definitely I'm not going to hold at this point. And so just a little warning, and I'm sure everybody is probably already freaked out with what happened today. I mean, it was just a really bad day, and I didn't get to sit in front of it, unfortunately. But when I came back and looked, and terrible. I mean, we don't have a new low yet, but we aren't very far away. This is a continuation candle. So if it's time to throw in the bag, then fine. And while there's some disappointment that we didn't get a bounce before it decided to, go on its merry way down or whatever, it's always fine to say, hey, this didn't work out, and it's time to wait and do something else. So I'm going to wait, and then I'm going to do something else. And that's just it. With the Dow, not quite as extreme as the S&P. We still have a little farther ways to go for the 200, but everyone is watching the S&P. So when it breaks down, it'll probably take everything with it, and of course the Dow will follow suit. So once again, bearish bar, starting to get some separation. Short-term moving average is pointing down. Continuation red candle. It's time to c'est la vie for the long side, unless something miraculous happens. You know, we had all of those NDEs with Europe. Some of them could have been considered positive, but it didn't matter. Market did not care. Very bad sign. And if we do pass the panic area, definitely we do not want to be holding any longs. So there it is, and we always want to be honest, and when something is wrong, we want to get out of it. So there you have it, and I don't know if there's too much really to talk about over the weekend, because analyzing individual stocks, is it really going to matter what a stock is going to do, what its chart looks like, if we do pass the 200 moving average and everything just falls apart? So no reason to look at that, and we have to watch the S&P and take our cues from that, and of course the Dow too. But there you have it. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you very much.